Good morning, everybody. Welcome to the Flow Show, Tuesday, 11th of December. Sorry, 10th of December, even. Oh, I'm getting a day ahead of myself. It is the 10th of December. Hope you are all doing well. Morning, Kay. How's it going?
Morning, mate. Yeah, morning, everybody. It's going all right. It's going all right. Bit of a transition day, although the dollar thinks otherwise of it. But yeah, it's going okay. How are you, Ryan?
Yep, all good, mate. All good. Yeah, a little bit of a quiet one on the data front anyway. But yeah, we've still got some moves going on, so plenty to keep us busy, and particularly from the RBA. So let's get stuck into it, see what's going on around the world. Starting off in China, because we've had some trade data out, and no surprise to see the trade balance improving somewhat. Imports well down, exports up. This is November data, okay? So this is when Trump got elected. So this is the election month. We're looking to see whether there's been a bit of a front run of that. The prior month was a healthy 12.7%, which could reflect some of that front running ahead of potential tariffs. It's still a healthy number, 6.7%, even if it missed expectations of 8.5%. Maybe the December data will show a bit more on that front in terms of firms pushing for their deliveries to come quicker. It doesn't necessarily mean this front running that people have ordered more. It just means a lot of people so far have been pushing to get stuff they've previously ordered rushed through and delivered before potential tariffs may come into play. So, as I say, it doesn't necessarily mean an increase in business, although that is one aspect, but it's more give us what we've already paid for quicker type stuff. But in terms of the economy, that's good news for China. Let's see if it lasts. There's some movers and shakers going on in Japan. Nippon Life are to acquire US's Resolution Life for 8.2 billion, according to the Nikkei. So we saw a bit of a run in the dollar this morning around about 8 o'clock. Could be the 8 a.m. man doing his usual thing, but also dollar yen maybe getting a little bit of boost from some M&A action there. It's said to be mostly a cash deal. Nippon Life have been heavily involved in investing in Resolution already. I think last year or somewhat they put in about $1 billion of business in with them. So this is something that has been ongoing. But that's not all. Various press areas, Bloomberg and others, are reporting that Japan's mega banks are apparently flush with cash and are looking to seal some overseas deals, with the US and India being the main targets for some of that cash. This has got a lot to do with reallocating of funds. Some of the profits they've made have pushed them above thresholds and they have to reallocate and chop stuff around. Kate, is this something that could feature strongly next year, particularly when the financial year kicks in?
Yeah, it is something that we need to pay attention to, because it's like Japan is still putting its money to work, and that's where we are looking at still. Yeah, they will be. They still need to look for growth outside of Japan, right, Ryan? And that's a bit of a theme that for as long as they don't get all the returns that they are looking for, especially in JGBs and stuff locally, I think it shows that they are still need to continue to put their money to work somewhere else. Yeah.
Yeah, so we could be seeing a lot more M&A action coming next
Could
year.
be, yeah, could be.
Yeah, something to keep an eye on. Right, over at the RBA, they held the rate steady at 4.35% as expected. In the statement, they say that underlying inflation remains too high, but then came a change in the statement from prior ones. They said the board is gaining some confidence that inflationary pressures are declining in line with recent forecasts, but risks remain. They also note that wage pressures have eased more than expected in the November meeting. Governor Bullock was out saying that we need to think carefully on policy, need to see more progress on underlying inflation. Says the board has noted that data has been softer. We have a little bit more confidence on inflation. Then a bit of a dovish line saying we do not need 2 or more quarterly inflation prints for change. They did not discuss a rate cut nor a rate rise either, so firmly neutral now. They do not know if they will cut rates in February. Deutsche has already revised its call for the RBA. They've shifted from May to February. So the bank's already doing the shopping around. So for me, the RBA, pretty much as expected, they're trying to hold out. There was another small step away from the hawkish line, very small step. They're moving in the right direction right now. Still leaves a bit of room for expectation on when they'll cut and giving them the ability just to turn a bit more dovish in their language. So as far as talking my book goes, it's good news. Although the price move thus far in the Aussie dollar, depending on what you're looking at, is maybe showing signs that we might be getting a bit more priced in. But we'll look at prices in a bit detail in a moment. Any views on the RBA, Kate?
No, it's kind of as we could have expected. Small steps towards some things to come, but not yet giving way to everything. We know that Bullock is a hawk, so maybe that's why we lost those 40, 50, 40, 30, 40 pips in the Aussie. But we saw the opposite move yesterday ahead of the event, and now we're back to where we were before, basically. And yeah, I don't have much to say about the RBA. I'm actually, on the other side, relatively surprised that they are holding for so long. Seems that Bullock really has everything to say over there, and that the rest is just following. We very rarely hear outspoken opinions from other central bankers over there. So yeah, everybody's following her lead, and yeah, it's all going slow. The thing is that if data prove her right, she would have been right to wait for too long. And then it's going to be down to what inflation does again now, right? So if the next inflation print is much lower, then I think everybody is going to bring expectations forward now to the next meeting instead of the meeting after next.
Yeah, absolutely. There's still a few people circling Feb. Some have pushed it out a bit further, April, May, that sort of timeline. But yeah, it's whether they can engineer a US style soft landing or whether they're going to see, like we had in Canada and others, where inflation starts really coming down quite quickly and they're forced to chase it lower. So I hope for the latter, but hope isn't a trading strategy. So we will see what happens. In other CPI news, we've had Norway out as well, with CPI a little bit hotter. Core CPI coming in at 3%, higher than 2.7 last time, although the headline number came down to 2.4% from 2.6. Overall, that should keep them on their current stance with no rate cuts for the rest of the year, and they'll be looking sometime in first half of the year to start cutting rates, or continue cutting rates. That's where they are at the moment. Okay, nothing there changes that thinking from the Norges, does it? That they're not going to start cutting until the early part of the year, perhaps?
Yeah, well, we're perhaps in similar situation there. Inflation sticky, and waiting for the next move. When are they? Are they due to? Oh yeah,
I think they've got
also on the 19th.
Yeah.
I think it's paused this month. Is it the expectation?
Yeah.
Yeah, that shouldn't have altered anything. Norges Bank is also not extremely hawkish on the average, so they may they may just call it a one-off or a bump in the road and moving on.
Yeah. Someone who's trying to move on is France's Macron. He's trying to move on and seek another coalition government. So that's still playing out over there in France as to whether they can cobble together a government. We'll see what that produces. SAP are going to cut around 3,500 of its 25,000 jobs in Germany. They're going to try and do that via early retirement and redundancies, according to Handelsblatt. So more jobless news coming out of Germany, on top of all the other prior numbers that we've heard about as well. Over in the US, the New York Fed had their expectations survey out for November, saw a jump in one-year inflation to 2.97% from 2.87%. So pretty much following what we've seen in the Michigan on Friday. 3-year also up to 2.6 from 2.5, 5-year up to 2.9 from 2.8. So those expectations still running a bit hot in the US, which is something the Fed will take note of. City have been busy. They say it's time to bet against rapid ECB interest rate cuts. They say the market has gone overboard in betting on swift reductions next year. A lot of the market is looking for a cut this week and then a cut every month until June, taking their rate down to the neutral, or where they see the neutral level at 2%. But City, for once, taking the other side of the trade on that one. But it's still the same old for their rate expectations and getting them wrong. They now expect the Fed to cut 25 versus their prior forecast of 50. They also see European stocks rising almost 10% by the end of 2025, which, given the performance we're seeing so far, 10% might be the least that stock rally by. The S&P is going to cut rates 25 pips and they'll reach zero or close to zero next year, according to a poll from Reuters. So they're getting their ducks in a row. JP Morgan says the bank will deliver 50 pips at its meeting next week. They were forecasting 25 pips, but they've cut that call after the inflation data. That was out yesterday, wasn't it, Kay?
Yeah, that was out yesterday. Yeah.
Was that a game changer for the Mexico?
No, it's everything is going gradual. It's no, I don't think it's a real game changer. No. No, I think they're on a gradual path now. And we'll likely continue. I don't think that's the case for them going all gangbusters. They said that they would still prefer to remain comfortably above the inflation rate. So I guess they are now going to look very much at the Fed. I think they will engage on their own stuff, but we know that the issues that they will have with Trump, that is the political side, but Mexico is Mexico, right? Politics and monetary policy are very close together there, I think. So it's perhaps more important what's happening in America now than what, unless of course their data start to go really south. Then I think they are going to follow the leader.
Yeah, I'll agree with you in that one. Keeping that big gap open as well, no doubt. Right, that's it on the news front. Bit of a quiet one yesterday. Any news you've got, Kay?
No, not really. No. We covered most of it. It's what's to come that's going to be important instead of what's happening overnight.
Yeah, exactly. Ali, you're asking why does PBOC stimulus not get the Aussie higher? Because stimulus alone doesn't send the currency out. The reason you see Aussie popping on stimulus is merely just an algo move, because it's assumed that stimulus in China will be good for the economy. That's good for the close trading partners like Australia. But once you get over the hump of the stimulus headlines, that's got to translate into actual positive activity, i.e. Easing has got to bring a result in the economy. And thus far, we're not seeing any of it. The PBOC, China, have been easing for over a year. If you think what they've been doing in their property sector since the Evergrande blow up 3 years ago, they've been throwing kitchen sinks at it. And yet here we are still with weaker looking economy. Okay, we got some good trade data overnight, but it needs to do a lot more. So that's why the Aussie move on stimulus news is very fleeting. Okay, it's good for a short-term bounce, but it's got to produce the goods at the end of the day. On the other side, as I've been talking about, we've got the RBA, who have been stubbornly hawkish, and now they're starting to turn. So that's a bit of bearish pressure for the Aussie. And you've also got what's happening in the dollar, US dollar as well, like we're seeing in a lot of dollar pairs. So that's keeping Aussie dollar versus US dollar on the downside as well. So that's the reason why that's happening. Let's take a good old butchers at the Aussie dollar while we're here. Let's go into one of the shorter term charts. So starting with Aussie dollar. So we had this nice little move up, got above that 64.40 level, couldn't last. We're back down below. Straight after, we're holding it as resistance again. What's important, and this is what I was alluding to just a bit earlier, we've come down to this prior low, okay? And this is very, or could be quite significant. We had that prior low down at 70s, then we had the bounce, then it stepped up to the 80s, okay? Which shows you where the buyers from down here are starting to park the bus. That we've held this level again after the RBA, potentially signals that we might form a bit of a base down here, a bit of a support base down here, which means that there's every chance of pushing back up above 64 and maybe having a run higher. Now, this could be short term, or it might not be. We may develop something like this where we get a bit of sideways action before another breakdown, or we keep holding support and we get a move up. Overall, though, we are keeping this downtrend going, and particularly this part of the phase. But if we don't make a fresh low over the next couple of sessions, that would build the case for seeing a bit more support down here. Sorry, mate.
Yeah, there's a big trend line coming in from 2022 lows, Ryan, there, right around that 63, 70, 80 zone.
Let's see if I can
if
get
you look
that
at the low 2022, the low 2023, the low 2024, it's a 3 points line, and it's getting right. We're trading right on it.
So that'll be right about there. Yeah. Cool.
That one. That's one that a lot of people are watching.
Yeah. So plenty of stuff down there to keep an eye on. Still got this low, this low area down here in the 63.50s. Keep an eye on if we have a move down there. That's one area I'm looking at. It's one of these longer term, much longer term levels than what we've seen previously. It goes all the way back some way. But yeah, this trend isn't for changing just yet. But as I say, short term, maybe we start to build a bit of a base around here. And that's potentially going to be important for what happens next. Quick look at my Aussie Kiwi. That bounced up to 110, got its nose above by a few pips. We're back below. For some reason, I didn't even have a fib on this. I just put it on this morning. Don't know why I didn't have a fib on this one, but it's on there now. Again, significant. We came down to this 109, 40, 50 level and bounced from it again after the RBA. So again, it just tells me, maybe we've priced this part of the RBA conundrum into things, so it might make the downside a bit tougher. I want to see us getting under, for my position anyway, under this 109.40 area again. Then we may go on to challenge these lows down here. Still, it's looking like we're keeping the momentum going, but this is going to be the key level here for this one. If we can't get below there, then again, we might be building a bit of a base. That will mean we likely move a bit higher for that one. Dollar CAD, I'll have a look at as well, if we can get in there, because this one played very nicely with the techs yesterday. We came down off this retest, this stretch point, all the way down to near this 140.90 area, which was former resistance, and then we had the break point, and it came down, bounced from there, and then went on and made a new high. And I keep having to move me bloody fib here every 5 minutes. So still, this trend is well entrenched, and this break of these highs is now significant. It means it's got the scope to maybe move on to the 142s. Let's put it onto me wider chart. No, if we've got it up there, no, let's keep it on that one. So the door is open. Oh, bloody hell, it's all going wrong today. The door is open now for a move up above here, and maybe we go and take a look at this big double top up in the 146s near 147. Okay, this trend is still going. Okay, so there's every chance that 142.65, that's the tops of one of these big weeklies over here. So that's my next level if we continue up there. But for now, what's going to stop this one, Kay? Not even the BOC, it seems.
No, looks a bit iffy for the Canadian dollar, if you ask me. This is Canada is weaker. I don't know what's going to stop it, Ryan. Honestly, I don't know. It's whenever the dollar picks up a little bit, it's one of the first ones to go, and it's even weaker than the MEX is right now. So yeah, I don't know. Is the market believing that Trudeau can't arrange the broken pots with Trump? It is possible. It's very possible. It looks very weak, and doesn't really bode well unless we got a big pushback tomorrow from is tomorrow, right? From the Bank of Canada. Yeah, this looks like the Canadian dollar could actually weaken further. And if you kind of look at it globally as well, EURGBP, for instance, despite the weakness of euro in other areas, can't stay low. Yeah, if you look at other crosses, obviously sterling is doing much better today as well. It really looks like the Canadian dollar is not your currency that you want to have right now, unless, of course, yeah, look at that. Unless, of course, the Bank of Canada pushes back. But then, if you think about the Bank of Canada, just front-running the events a little bit, if you look at how the market is, and in which kind of mood the market is, it could be that Canada, if they underwhelm a little bit in their dovishness tomorrow, that you're going to have like a little bit of strength in the Canadian dollar and then straight away fade it.
Yeah, that's exactly what I'm thinking. I think, do they go to 25? A lot of the market's expecting a 50, so we know the risk is that they don't go a 50. But is that going to stop them? Is that going to put them onto a real pause, or is it just going to slow them down a bit? But yeah, if we saw that, I think I would consider a potential dip buy.
Yeah, I'm thinking too. Stuff, but choose your currency. Stuff, well, could be straight dollar CAD, but then, yeah, thinking about things like sterling CAD, for instance. What else is doing better? I don't know really. The rest is not doing great. Yeah, it's probably those two, right? Dollar CAD, sterling CAD, probably the best ones to be in if you want to fade any Canadian strength on the central bank.
Yeah, pound CAD. Yeah, pound CAD could be interesting as well, seeing as the quid seems to be holding its own again for the moment. So yeah, a couple of pairs. But we'll look at that in more detail tomorrow. Excuse me. Dovish asks, what's the impact of tariffs tit for tat on those two? I assume we're talking dollar CAD. It's the same with, sorry?
CAD and mix, I guess.
Yeah, it's the same thing that we've seen already. Okay, Trump's threatens them. They want to come to the table. I expect that to be the case. It's in Canada's interest to come to the table. They don't want to get into a bum fight with the US, their closest trading partner, same as the Mex. But maybe there's limits and levels. You got to remember the Canadian government, Trudeau's government, isn't exactly in a great place either. So there could be changes coming there. So there's all that politics to deal with. I'd take tariff threats as they happen at the time. So when you get a headline like we did last time, which caused that spike previously, then it's quick to fade out. So if you're the right side of moves like that and you get a tariff headline, you get a pop, that should be your cue to take some profit and not look the gift horse in the mouth. But then you have to come back to what happens later on with that. Ali, you missed your euro sterling. We have got a potential break. A lot of us have been waiting a long time for this. Well, a few weeks, days, whatever. This might be it. I've been talking about this 82.76 level. We've had pokes underneath it. We can't stay below it. Now we've cleaned out all those lows and pushed much lower. So we have potentially got a break here. It might need a retest just to confirm it. So I'd expect, maybe from the 65, 70 area, if we start seeing resistance there, then that's your clue that we are potentially breaking. What does that mean? Going on to the longer charts.
Back to 60.
Sorry?
Back to 60.
Yeah, who was measuring this one? I think it was on Face, measuring the move from this move, takes it down to, I don't know, the land that time forgot. But let's worry about getting to 82 first before we worry about going all the way down there. But this is what we're potentially looking at if we get below this level. Okay, we're looking at the 82s, low 82s potentially. We have got a few prior lows in the mix previously, sort of around the mid 82s, a couple of little lows there, but this is a real historical level, goes back quite some way down here, this 82. Okay, so this is a biggie. If we break that, that is potentially a huge range break, and then we might be looking at some decent numbers to come. It's not going to happen in one day, I can tell you that. So for now, still constructive for the short side, still keeping this over 2 year trend going. But we shall see what happens there. I'm going to be looking for that 82s to take a good chunk of profit, and maybe even look at a separate long, just to get a first initial bounce from that one. I know you're short this one as well, mate. What are your plans for this?
Yeah, I'm. It's one of my year-end trades. Well, I mean, the plan is that it's one of my year-end trades. So yeah, I'm short. I was just looking at that weekly. If you look from the low in 2000 up to the high in 2008, I was just running through. The 38.2% is also around 82, 35, 40. I mean, it is a lot happening in that 82s, huh? A lot.
Yeah.
So I think it would be really a major break if we get one, because you're looking at the whole, call it 82.10 up to 82.40. It's all happening around there. So I think it could be significant if if we front run the events a little bit. Now, it could be a very significant break. That's what I was going to say if we ever get below there. Now, the thing is, we are also ahead of those central banks, right? You have the ECB first, and then the next week we will have the Bank of England. Then we are in year-end territory. Does one have to do with the other? Probably. Those expectations for the ECB still somewhere being between 25, 50. Bank of England probably not. 25 would rather be the case there. That could all have to do, but I also think it has perhaps already a little bit to do with the month end or year end, potentially, because as we know, the FTSE has been a big underperformer throughout the year again. So yeah, for me, I see it as a slow grind, and then I'm going to do the same as you. I'm going to take a decent bid off if we see 82.15 or so, and then see what happens there. But I will probably, if we get it like earlier than the central banks, and then I'm specifically thinking about the Bank of England. If we get it earlier, I still want to keep a bit open, to see if we can actually have a run under there. It took a while to start. If you look at what we did, if you go back onto the shorter term, it took a while to develop, especially this move now. We've spent since well, the whole start of December really trying to figure out if we're going to break or not. And now it does look as if this really wants to go now. But I wouldn't think it's one that you want to be short in just intraday, because you could be very disappointed as Euro sterling does.
Yeah, exactly. Yeah, I don't know. I may have a little add if we go up and test that 60-70 area and hold it.
Yeah.
I may have a little add back of the slices I've cut so far, just to see if we get a push lower. But yeah, you got to be careful. We could hit 50 here and then spend the next 2 weeks going 50-70. So yeah, you always
Yeah,
got to be
but
careful.
but then yeah, but the good thing on the pure technical basis, the good thing is that we never made it above that 83.10.15 anymore. That
Yeah,
is really good since we've broken down, and that is really good, I think. Yeah.
yeah, it's similar to what we've had here with the 82.76, just on a longer time frame. We had this 83s, we had these little pokes, got below, couldn't stay for long, got below, couldn't stay for long, got below. And now when you start seeing it holding, that's what you want to see when you in a short trade. You want to see levels breaking and then holding. And we got similar here with these little pokes under here. So I'm looking, if you get a similar price action here, we start holding that, then that gives it the reason to start pushing lower. So yeah, that's why if we start seeing resistance up here, I might have a little add back into that. Right, let me ping it over to you for a few, mate.
Yeah, sure. So
Where
let's
we go?
have and then we are going to for the intraday perhaps, because I just don't wanna go into any longer term considerations right now. But the weakness in the euro, and then especially against the dollar, against the sterling. Now we see it starting to creep back into stuff like Euro Swiss. It's still based on those fundamentals. Yes, expectations for the ECB perhaps, but we've been talking, and I've been talking very 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 often about I still don't like the euro, and we are seeing it again this morning. How easy it is actually to get back down. Okay, we bit of a short-term wedge here. Again, short-term, I wouldn't be looking at stuff like don't bet your house on it for the medium term, but I would not be surprised looking at the weakness that we have here, and looking at how easy it was to start to come down again in the euro dollar, that we're going to have a look again in potentially in the 104s. That I think is still looking at to be the side of the least resistance for now. That ahead of tomorrow's US CPI, of course. Yeah, tomorrow's CPI. That's why I'm always saying like to trade it short term. Tomorrow's CPI is probably going to define what's going to happen into the FOMC, and then probably the dollar is going to move versus everything. And here as well, we're finding obviously this euro sterling effect back as well. Is that the cable is holding much better than the euro. Yeah, we had this move outside of the wedge. There's this bit of a longer term resistance here, where that we tagged. We're back inside the wedge, and we came to rest on a bit of this intermediate level again, around in the 127.30s. I think that for the intraday is one to look at, and then 127.10 under there. the problem is with those shorter term pictures. The problem that I have with them is that trend lines come to the market far too fast for my liking. When I look at stuff, even if I trade them in and out, I like it to be a bit smoother. This is a bit steep, but anyway, it shows up around the prior low. It shows up around the fib. It shows up around a prior area of interest in the cable, and that's around 127.10. If you say this tested, then that's going to be a test for the dollar. Can it break before tomorrow? Well, I'm going to say based on the strength that we are seeing again in sterling, perhaps difficult to break below 127.10 ahead of tomorrow's CPI on the US CPI. But anyway, keep an eye on it because the dollar is finding some traction here this morning. One that I'm going to look at, Ryan had a look at the Aussie. I'm going to have a look at the Kiwi. I've been trading this around. Yesterday, I did well to take some off here at around yesterday's highs, as the people know in our room. I've re-added it around 158.30 here, but really Kiwi, it lacks strength as well as the Aussie. It really lacks strength, and so having traded it around, my average is pretty decent, but I'm not going to fight it if this breaks 58.0595. That's where my short-term panic level is, and I'm going to get out. If it doesn't work, why keep it? Before it starts to cost money. If ever I would let it go further. So I'm not going to fight too much on this. I was hoping for it to have found bids already earlier, and especially in time. And I was hoping for the Kiwi just to hold around here in the mid to high 58s for them to start to push. But again, it's a little bit like your euro at 106 figure 10. You have a move above and then you fail and you come back down. Euro did exactly the same over the jobs report last Friday, moved above this 106. It's 106 figure 10 and then straight away failed. The Kiwi is doing roughly the same kind of move, all right? So we have to be a bit careful. There could be a few stops below here, and we could see the Kiwi trade down rather into the 70s or even lower. Why not? Depending on the dollar in that case. All right. What else? And dollar Swiss is still on the 88. Oh yeah, you guys always want to know about gold. This one here, this trend line here, we are hitting, and for the time being, banging our head against it. 75, 78 on gold. We really need to break, hold for it to go higher. I saw your comments, Ali, about about China and stuff like everybody and his dog saying that this should be long gold. I think it's wrong, and we talk a different we have a different conversation here on ForexAnalytix, right? I mean, we are not like everybody and his dog. We respect the levels. We have our views on stuff, but we are not of the kind saying like, okay, this has to go, this has to go. My long-term view hasn't changed. My long-term view, I'm still seeing this flatlining or consolidating at relatively lofty levels, and I think it should also over Trump go higher, unless he gives up all the plans that he has put forward, of course. But I also think it should go higher over Trump's presidency. But in the meantime, we have to respect the levels, right? And I still think we are more or less in this bigger range with inside moves that can happen. We could have a move back up to 27. I don't know whether China is going to continue to buy in December. Could be the case. It actually could be just because of China continuing to throw the kitchen sink at their economy, okay? And it could also drive Chinese to continue to buy gold. I also think, as I already often say, it's not only it's not only People's Bank of China either. You have to look at all the Asians and all those who could be a bit under pressure through Trump tariffs or so, and because Trump tariffs should be inflationary at some stage, and we know that gold likes to be one of the anti-inflation trades. Okay, for the time being, respecting the levels 75, 78, we just had a quick look at 76, 77 again, and we stopped again. So keep an eye on that. All right, on the underside, intraday 47.51, that's where it should hold for now, but bigger levels are to be found lower down. And I would say now start to pay closer attention to what's happening in the 2620s if we would go back down there. Silver, oh, that's behaving pretty nicely technically. We went to see the 50% of the move back down, and it stopped right there yesterday. So that's an interesting one. So we can trade those levels 32, 25, 30. That is where we should find some interest, which we did. And then above there, though, I wouldn't call it a victory. It can go another half a buck higher, but there has been traffic in that zone in the past. So up to 32, 80, 85, I would watch it. If it would go up there soon, very soon, I might take a little bit of my longs off and then let the market do its thing. I'm roughly through what I wanted to say. The yen, yeah, bit of a lottery right now, the yen, but we are closing in on the levels where I suspect 151.90, 152 and a quarter, people will want to try it short again. That's what I think. The logic would be as well, because people are going to look at those levels and say like, oh, 152, 2 and a quarter, I want to be short, and then ride the next wave lower if it would come. But beware if this breaks back above 152.60, because then there's a few who are going to run, in my opinion. So I look at the rest of the dollars. The dollar is relatively big, so watch out what's happening here around 152, 2 and a quarter. If it caps, we could build a top and then start to go back down. If we fly through here, beware, because it could accelerate all of a sudden. And that's it for me for today. Ryan, back over to you, mate.
Thank you very much, mate. Good to see your stuff as always. We'll call that a day for today. Thanks as always for coming to the Flow Show, supporting us here and watching us. Don't forget to like, retweet the show when you see it popping up on the old social media. All helps get the people in. Thanks for your conversation. Have a great day, everybody, and we'll speak to you tomorrow. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.